Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 17th, 2025, and we're diving into the latest earnings report from So Young, the leading aesthetic treatment platform in China. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss So Young's performance, especially given their significant role in the aesthetic treatment industry in China.
Revenue and profitability overview. Let's start with the top line. So Young reported total revenues of $54.3 million for Q3 2025, which is a 4% increase from the same period last year. John, can you elaborate on the factors driving this growth?
Absolutely. The growth in total revenue is primarily driven by the expansion of their branded aesthetic centers, which saw a significant increase in aesthetic treatment services revenue, up 304.6% to $25.8 million. However, it's important to note that despite this revenue growth, the company reported a net loss of $9 million, with a non-GAAP net loss of $8.7 million, indicating challenges in profitability.
Operational efficiencies and future outlook. Operationally, So Young seems to be making strides. The number of verified treatment visits and active users has increased significantly. What does this mean for their future outlook?
The operational highlights are indeed impressive. Verified treatment visits reached over 89,800, and active users exceeded 130,000. The growth in core members by 40% is particularly noteworthy, as these members contribute significantly to revenue. Additionally, 20 out of their 39 centers achieved profitability, which bodes well for their future as they aim to expand to 50 centers by year-end.
Cost structure and financial health. Let's talk about costs. So Young's cost of revenues and operating expenses have increased. How is this affecting their financial health?
The increase in cost of revenues to $28.6 million and operating expenses to $35.9 million reflects their aggressive expansion strategy. While this has impacted their bottom line, their cash and cash equivalents stand at $132.4 million, indicating a solid financial position to support further investments in their centers.
CFO insights. What insights did the company's leadership provide regarding these results?
CEO Xing Jin emphasized the strong growth and trust in the So Young brand, highlighting their commitment to making aesthetic treatments more accessible. CFO Hui Zhao pointed out improvements in operating efficiency and cost structure, with a focus on sustainable growth as they approach their target of 50 centers.
Key takeaways. In summary, So Young has shown impressive revenue growth, particularly in aesthetic treatment services, despite facing profitability challenges. Their expansion strategy and operational efficiencies are key to their future success. Thank you for joining us, John.
Thank you. It's been a pleasure discussing So Young's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on So Young's performance in the comments below.